You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music can mean only one thing. It is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time for episode dos here, the Thursday edition of the old OB, a.k.a. the Option Block, a.k.a. your bi-weekly source for all things options related. I will be your host, your guide, your maitre d', showing you to your options table here for this 1 hour journey. Of course, Mark Longo from theoptionsinsider.com, as well as from the ever exciting, at least we hope so, Options Insider Radio Network. Pleased to see so many of you have been joining us day in, day out on all the shows that are coming at you. Usually a couple of shows hitting you pretty much a day. So you're not wanting for content on the network. Of course, if you like what you hear for this, for anything we do on the network, keep those reviews, keep those comments coming. We do love to hear from you guys. And let's see who we're going to hear from today. I do believe we have a fun one in store for you today. Listeners, first, back from his hiatus, his sojourn to parts unknown, good old Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, sir, pleased to have you back again. We missed you on Monday, sir.
Always a pleasure, and sad to hear that my guess of the 80s theme was incorrect, even though I didn't even hear it. So nonetheless, excited to be back on the Option Block.
Yeah, your pre-guess of Different Strokes didn't really work out. We have considered Different Strokes a few times. The problem is it says Different Strokes about 100 times in the song, so it kind of gives it away. Not so good for the old guessing game. And also joining us back from the almost literal dead, a lot of returning names and voices on the show today. I'll get to the others in a second. But first, back from the dead, resurrected in the old GIOVINAZZI compound there on the shores of Maine, the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital. Mr. G, welcome back to the program. Glad to see you are still with us, sir.
I'm still alive and kicking, although I'm a little coffee, but not near as bad as it was last week. So I made a recovery from my cough, flu, cold, whatever the heck it was.
/ Corona.
You know what? I don't think I ever lost my sense of taste. I was still quite famished the whole time.
Some might argue you never had a sense of taste, but that's an argument and a conversation for another day.
That's another conversation.
You came back right for the umbrage, but you know what, Mr. Rock Lobster? You picked a good one to come back, because I have a treat for you. I have a gift for you, a blast from the veritable past. Are you ready, sir?
You know what? I'm sitting down.
You hear that laugh. You know what I'm talking about. How long have we referenced this person? How much listener mail do we still get to this day? How many times have you asked me and referenced him in conversations, usually around premium selling? Yes, in keeping our theme of epic returns on this episode going, we have a third hot seat on the show today, none other than the demand derivatives hot seat, where I am very pleased, nay excited, nay thrilled to welcome back our old friend, Mr. Don Schlesinger, now the president over there at Demand Derivatives, a.k.a. the guy who never met an option he didn't want to sell or not sell. Mr. Schlesinger, welcome back to the network, sir. It has been too long.
Well, it's terrific to be back. Thanks very much, Mark, and glad to be on a slightly different show this time, but I know we'll have some lively conversations, and I'm happy to be with everybody.
I forgot, Volex founder, Blackjack Hall of Famer. What have I left off the resume, Donald?
That's enough. Track coach.
Track coach. There we go. But really quickly, obviously you haven't been on VolViews in quite some time, the better part of a decade, even though you were integral to the early launch of that program. Catch us up really quickly. What have you been up to in the intervening better part of a decade, and what the heck are you doing at Demand Derivatives now, sir?
Well, of course, Volex actually merged with Real Day Options, Daily Options, and we formed the company Demand Derivatives, and we are busy at work trying to launch what will be a revolutionary new exchange and clearinghouse. And so that does take a lot of time and effort, and obviously, as everybody realizes, trying to raise capital as well. So we are getting closer by the day, and we hope to have some exciting announcements in the months to come.
Well, Don, you'll be pleased to know whenever we reference someone aggressively selling premium, or more often than not, someone outrageously buying a lot of premium, typically you are referenced alongside that, Don. So you live on in the spirit of the network, even if you weren't on it, sir. So
good to know.
Whenever we see someone buying a ton of premium, you always say, I don't think Don would be a fan of that. So let's get into it all then. I'm really excited. This is going to be a fun one. Here we go with the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading, what is lighting up our screens on this day. And yet another day where lighting up our screens out here today is pretty much a whole bunch of green. Most of the major indices up around 0.5% or pretty close to it. S&P pretty much right at that 0.5% level, Dow up about 0.4%, and NASDAQ up about 0.2%. So NASDAQ once again leading the charge to the upside. Speaking of upside, by the way, we'll get to it a lot more on TWIFO later today. But man, Bitcoin, holy crap, just on fire out there of late. Everyone's talking, can it hit 20,000? Yeah, it hit it. Now soaring into what 23,000 now? Just hitting new records out there all the time out there. So just crazy town. It's at 23,229 right now coming into showtime. So yeah, it's had a bit of a move out there. So if you're not tuning in to the Crypto Rundown every Monday, you're missing a heck of a lot. We're also going to hit on it on TWIFO because the CME has obviously a lot of offerings in that space as well. But yeah, just fascinating stuff. If you want volatility and volume and action, look no further than everything going on out there. In terms of what's lighting up our tape here on our usual suspects, let's start in the volatility realm. Our old friend VIX, a little bit shy of the 22 handle coming into showtime, puts it down about 1 3/4 points from this time on Monday's show. VVIX, a.k.a. the vol of vol, down to about 109. That puts it down about 8 points from last show. So still frothy, still elevated, but not quite at that 120 level we've seen many times and beyond over the course of this pandemic season. VXX, a product you guys like to fade, getting its fade on once again, down shy of the 17 handle now, about 1680 coming into showtime. Puts it down about exactly a point from where it was on Monday. And the newest addition to the vol landscape, a.k.a. vol Q, a.k.a. the at-the-money vol of the NASDAQ 100 at about a 23 even coming into showtime. Puts it down almost 2 points, about 1 3/4 points from this time last show. But now I am pleased to turn to the demand derivatives hot seat, Mr. Schlesinger. It's been a while since I've had a chance to ask you this, but what, sir, is lighting up your tape? What's been going on out there in the world of realized vol, and what's happening right now with all this madness in the market, sir?
So I think something that's interesting, I don't know if you've discussed it before, but it certainly catches my eye, and that is everybody knows that there is the so-called risk premium between implied volatility and actual or realized volatility, and that in normal market environments, that risk premium can be anywhere from, let's say, 2 to 4 points. And it bounces around. It even inverts occasionally under extraordinary circumstances where you have a tremendous spike in volatility. Realized can actually exceed implied, but it doesn't last very long, and it's usually a rather short phenomenon that restores. Well, right now, as you just mentioned, VIX is just a tad under 22, and most people take that as a surrogate for market volatility. But of course, it really isn't. It's a somewhat prediction of what volatility might be 30 days from now. And I think some listeners might be surprised if you said to them, what is the actual volatility of the market right now? Calculated by a close-to-close formula of the annualized volatility of the actual market closing prices. And I'm not so sure that so many people would answer 11 and a quarter. That's 11.25. So that is the recent 21-day actual or realized volatility of the market. So you've got VIX at almost 22, and you've got the actual 21-day at 11. And I think if you take a look at the 10-day, which is even more recent, you've got a single handle. You've got in the 9s. So what is the point? The point is that this spread that is historically anywhere from 2, 3, 4 points is now actually 11 points. And that usually is not sustainable. So when that happens, you usually eventually converge or restore to the more normal relationship between implied and realized. So you have to kind of say to yourself, this may be a good time to start looking at the opportunity to sell options at 22 implied volatility when in fact the market is displaying a somewhat lower by a considerable amount actual or realized volatility. Of course, things can converge in a couple of ways, and they can converge to the possibility that the actual volatility increases and steps up again. We had higher volatility of realized around election time, and of course that was during the month of November. And we do have this very important runoff of the senatorial elections in Georgia coming on the 5th of January. Some people might think that could heat up market volatility once again. But if I had to guess, I'd probably say that with the end of the year and with the usual good or rallying markets that we see going into year end, chances are that we might have higher markets as we've been seeing for the past week or so. And if that's the case, my guess is that because of the inverse relationship, as the market goes higher, it's very likely that implied volatility will be dropping even more. So because of this unusual spread between the two, and because of my own personal belief, which is just a prediction, that we'll probably see between the vaccine news and the stimulus news, the market continue to be strong into year end. My guess is that VIX and implied volatilities might drop even more, and so it might be a very decent environment for selling option premium.
I like it. All is right with the world, Don. You're back on the network, and B, you're talking about selling options again. So I have a smile on my face, which makes me happy. But really quickly, we're going to get to this a little bit later. We had a poll we asked our audience about, and I've had a chance to poll each of my co-hosts about this as well. But I'm curious, you're talking about the risk premium. It's obviously elevated right now, as you just pointed out. The implied is at, shall we say, extreme levels compared to the realized. What do you think is keeping the implied end so elevated right now, Don?
Well, I was looking at VIX, and so you take a look at it, and what's interesting is, we're saying elevated with the 22, but it was just recently, as high as 26 or so. So I'm looking at my own graph here, and it is dropping rather considerably to the point where, you might say that it is indeed trending downward. But again, it's always interesting to consider what VIX really means. And VIX is forward-looking, and you have the prospect for a new administration. You have the prospect for the runoff in Georgia that I alluded to. So I don't think it's terribly unusual for people to think that, volatility could, in fact, hang around these levels for a while. I'm just pointing out that the sentiment is one thing, but the reality of the situation is something else. And the reality is saying that the markets are simply not, from a formula point of view, all that volatile right now.
If only, Don, if only there were a way for people out there to trade the actual realized volatility of the marketplace. Oh, what a crazy idea, sir.
and boy, do I wish we were up and running during this crazy year and crazy period going into the election. But we are going to one day soon have realized volatility futures and options, and the ability to trade and do all the things that people do with VIX these days, but do them settling to realized volatility instead. It'll make a wonderful complement to the VIX product, where we're not looking to replace it or make it obsolete. It would be wonderful to be able to trade alongside of it and to have people do these kinds of spreads that I'm just talking about, such as, perhaps selling implied and buying realized, and making a bet that a risk premium will narrow. So there will be tremendous opportunities when we're up and running.
Well, if what we're seeing on the crowdfunding side is any indication, it seems like things are going to trend in your favor pretty well there, Don. But Mr. Rock Lobster, take your glasses off, I should say, and become Volman. Volman is now back from the dead. A, how fun is it to be talking selling premium and selling the risk premium out there with Mr. Schlesinger again? And B, what has Volman been up to now that he's back from the dead? What's catching his eye?
Now, so before I put my Volman hat on, remember when I put out the note when was in March of the show and the COVID was raging, and the people we were like, hey, what are you doing now? What are you doing? And I said, well, you pick a put that looks ridiculous and you sell it. And then we got all the people like, yeah, Sarah, you shouldn't be telling people to do that. And I think at the time we were selling like the Disney puts, the Disney 50 puts in January were like $9 or $10. 50 puts, it's like, So I would say it's great to have Don back because he cuts through the hype of all the products, and I agree with him 100%. I think a lot of the premium right now, and I have been early on this all year, at least probably since May. this is, I think, the first time, though, that realized vol has actually really compressed for a couple of weeks since the whole COVID, what I would call the COVID volatility era. And I think the Georgia runoff does loom large. If you look at the kink in the SPX curve in term structure, that's where the vol bends pretty hard upward. And that's where Vol Man put on his hat and say, how low does vol go? Even though we have a 9% realized, how low does VIX go? With the runoff kind of hanging between the now and the then. So I think the biggest thing with vol products, of course, Don's just saying, screw the vol products. I just want to trade the realized vol, which I hope to gosh, I'd love to have this product out there, and also as a pricing signal to see what's going on, to be honest. But I think that's very much the case. You still have, and I just read a thing from Goldman, right? Goldman's basically saying, hey, you know what? If we vaccinate like 5 million high-risk people, the number of people going into hospitals are going to be down drastically in 30 days. Wow, big surprise. I kind of thought that was the plan, right? Everybody's not, with all these lockdowns. And so I feel there is a lot of that. I think there's a lot of that noise that continually comes out of the press, like it's bad, it's bad, it's bad. I have a feeling that on January 20th, there's going to be like the skies are going to open and the clouds are going to part and everything's going to be fantastic again. But until then, it's going to be very dire when already the hospitals will start to be emptying out again. So, but I think the algos pick that up, makes the market a little whippy. But as far as like SPX moving, it's just not moving. So I would expect a lot of that premium to come out, but I don't think we're going to see the big flush until after the 5th. It remains to be seen how, but if people are out there buying it, and I think that straddle right now, what I would call the VIX straddle, the 30-day out straddle, is like $135 or $140. It will start to price somewhat like an earnings cycle, where they're not quite letting the vol come down because they're expecting a potentially big move or a surprise. Because I don't think anybody believes the polls anymore at all, no matter what, whatever they are, nobody believes them because they've been so, I think polling is dead as an art anyway. And I think that keeps VIX a little elevated. I'm watching too, another thing for listeners to watch, just watch the premium in the puts in the vol products. Like, look at the January cycle puts in VIX and VXX. Those things are trading for nothing. Very, very, very low vol, in my opinion, for the potential move that the VIX futures can generate if they move to like an 18 or 19 handle in the Jan cycle. And we haven't had that yet since March. But if you think that's a possibility, that would put VXX probably around $12, 12 to $12.50. I'm not saying it's going to happen, but that's what could happen to VXX if the whole, if the future complex takes a 20% tick down, by early January. So, like, these are all big potential moves, and right now the puts are not. The puts are pricing, continuing to take basically this time. If you think about it, if you don't think anything's going to happen much between now and January 5th, you're going to start you're going to kind of mentally roll the date forward in your options, compress the price of the options because you don't really think anything's going to happen. And then all of a sudden options will kind of reflate again, quote unquote, as you get closer to January 5. So I see that pricing. Puts just aren't moving, even though VXX is down. The vol futures are sinking a little. So I think there's a little bit of suspended animation in that trade. So if you are a buyer of puts in the vol products, which, sometimes when they go down, they can make some money, I think you might have to deal with a suspended animation for a while. But it's great to have Don back. And I agree with him. There's a huge the market is definitely slowing down. That's usually a sign, right? It's usually a sign of participants are there's a little more liquidity might be coming into the market. There's a little bit less, a little less froth, and there's just a little less movement intraday. And that's the way that the VIX ends up coming down. 30-day volatility comes down. Can't come down unless the market stops moving. So at least we got part A of that done now. So.
And how do you welcome back Mr. Schlesinger? You go out there and tell the folks to buy a whole bunch of downside premium. How dare you, sir? Have you learned nothing?
Actually, I'm saying wait. So I'm doing the Don. You either sell or don't sell. So I'm like, you either buy or don't buy. And right now I'm still, I think you want to hold on. Hold on.
All right. And he is back from the proverbial dead as well. Thankfully, he's not under the weather anymore. Uncle Mike, glad to have you back as well, sir. We missed you on Monday for our dose of optimism. It is indeed an Uncle Mike type of day. Everything's pretty much in the green. So what is lighting up your tape out there today, sir?
Well, first off, before I continue, never before in the history of the entire stock market has there ever been a better time to sell than today. So we did get new all-time highs in the S&P 500.
So you're saying it's a day that ends in Y now. That's what you're saying.
That's kind of what it seems. But we haven't hit all-time highs on days that I'm on the show in quite a while, actually. It's like we hit the all-time highs on like a Tuesday or Wednesday or whatever, and I'm not on. So it's kind of exciting to actually get to announce it today. New all-time high day, always a very exciting thing. So, I just wanted to mention that. And for some reason, just something's in the air right now. I just have all this urge to sell a bunch of puts, and I just have all this urge to just sell all this premium. I don't get it. I don't understand it. But anyway, so, we have a lot going on right now in terms of are we going to get a stimulus check? Are we not going to get a stimulus check? What's going on with the vaccine? Looks like so far so good in terms of what's happening out there and how it's going. There have been a few cases of people having allergic reactions to them, but those have been fairly minimal so far. So that's good news, not necessarily for the market or because that's not necessarily a predictable correlation, but it's very good news for our society that so far things have been going very well with that. The other thing that I'm noticing today is you'd mentioned Bitcoin earlier, but silver is actually making another run at things. Silver, I'm following SLV, that's up over 2% on the day, over the 24 mark again. And so I think what we're seeing here is that if we are going to have stimulus checks, then we're going to have more dollars. When we have more dollars, then we have less value in the dollars. We have less value in the dollars, and a lot of times commodities do go up higher. And so I think that's kind of a correlation as to why silver is heading up on the day. And that I'm proud to say I'm short a put on silver. So with that, my short put is now out of the money again with silver. So with that, pretty exciting along those lines. And I think just right now, the market is kind of playing wait and see to some extent, just because of the fact that we've been around this 3,600, 3,700 range for a few weeks now. And 100 points in the S&P really isn't that big of a deal anymore as it used to be. And that before, when we first started this show back in, about 10 years ago, 10, 15-point move in the S&P was kind of a big deal. And today, it's, I think as Mark would put it, it's it's like not even 0.5% anymore. So a lot to digest with what's happening. But ultimately, I think from a market standpoint, what's happening right now in the marketplace is that people are waiting to see what's going to happen with the stimulus check. The Fed talking yesterday, that didn't really have a lot of movement on the marketplace. I don't think anyone was surprised. I think I even heard one reporter say it was the most boring Fed meeting of all of 2020, which I would agree with. So I think right now, a lot of things with which we are looking for are stimulus checks. And before I give the mic back to Mark, I do want to make a reminder, and I'm going to I think this is very important that all of our listeners understand. If you have options in SPY, today is ex-dividend day, or tomorrow will be ex-dividend date. So in theory, let's say that you have an in-the-money call. Let's just say that you're naked and in-the-money call. You could get assigned today, and you could end up being short and having to pay the dividend. So just make sure you understand what the risks are of all that. We've talked about those on the show a lot of times. But if you have any questions on what the risks are of being short call options on SPY the day before ex-dividend date, make sure you call your broker or call someone who will know, or call 888 options, or call somebody to make sure you understand what those risks are, because you need to have an understanding of it, because if you're listening live, today is the day. That is what I have, Mark.
Well said, sir. Everyone always forgets that SPY divvies creeps up on everybody. I can always tell it's that time of year because we get those emails like clockwork. What happened to my SPY account? They always forget that dividend just kind of lurks out there. It's not a surprise, yet it seems like it is every quarter, which is always fascinating. Let's see what's surprising us about what the volume. Then we'll get on to a little bit of the old odd block here. VIX, as of a few minutes ago, doing decent paper, about 227,000 contracts. The ADV is now shy of 500,446,000. The SPY at about 2.2 million. Watch out for that divvy. The ADV ticking down there as well, down to about 3.5 million out there. The S at about 639,000 contracts. The ADV out there pretty much exactly a million, which is kind of interesting in and of itself. The Q's at about 582. The ADV out there lighter now. It's about 812. It's down from about a million out there as well. So pretty decent paper out there for the Q's and small caps, which have been capturing everyone's fantasy out there of late. We'll get into that more a little bit later today. On TWIFO at about 349,000 contracts. The ADV is a tick under 600K. And actually coming into our top 10 most active single names today, we have a very rare tie for the number 10/9 spot. That gets us to Snap. It's there at number 10, I guess ever so slightly less. We rounded off here for the list. We'll put Snap at number 10, followed by number 9, Amazon, just barely in the top 10, also at 229,000 for both of those. And number 8, Plug. This is not a name we see in the top 10 very frequently. This is Plug Power, ticker symbol Plug, trading $30.61. This is a hydrogen fuel cell system company, and they're good for nearly 250,000 contracts out there today. Stock's moving a bit as well, up about 8%, so obviously having a pretty active day out there for Plug. Number 7, perennial top 10er these days, Pfizer at about exactly 250,000 contracts. Number 6, Microsoft. Good old softy, still in the top 10, 259,000 contracts. Number 5, AT&T, a.k.a. Telephone for Don's old-time friends out there. 279,000 contracts. Number 4, NEO, another perennial top 5er, usually, if not top 3er. Today at number 4 for 363,000 contracts. Number 3, Palantir, back in the top 3. 392,000. Palantir is starting to become a player out there from an options perspective. Certainly keeping an eye on that. It's kind of like the new NEO out there, just fighting its way into the top 10 all the time. You know what number 2 and number 1 are, just a question of the order. Number 2 today is Tesla. 793,000 contracts. We'll get to them in a little bit. You guys have some thoughts on them, obviously. Number 1 with a bullet today, the old fruit company, 1.2 million contracts exactly. There are some earnings popping off this week. We'll get to all that, but I think we're going to touch on it in the odd block context. So without further ado, it is time to keep on rolling and get weird and get wild. It is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, time to get weird, time to get wild, time to unleash our eye of Sauron upon the markets and see what it fixes its gaze upon first. And first, we're going out to the lands of ABEV, a.k.a. ABEV, ticker symbol ABEV. This is, of course, the combo entity of Anheuser-Busch and the Brazilian brewing company out there, Companhia de Bebidas. I'm sure I butchered that nicely. So, yeah, a little bit of a combo brewing company, trading today for a nice juicy $3.18, up about 0.5% out there. We got an interesting trade. Before we get to that, let's see what this name has been up to over the course of the past year or so. A year ago, it was trading a wee bit north of where it is right now, $4.62. Then it kind of fell off a cliff by the great nadir there. It was trading down to $1.90. So apparently not a lot of beverage demand in the height of the pandemic. The people probably need more beverages in a time like that. But this one kind of stayed low for a while, hovering around that $2 mark for a long time, pretty much into June. Then it rallied on, you know what day, June 8th, all the way up to $3 again. And then it sold off right again. And then it kind of languished, sold off down to $2.18 again in late November. Then it started rallying from there, or early November, I should say. And by late November, it got up to almost $3, and it's kind of been flirting with this $3 level for a while. And then it finally resurged again and broke through it recently, and back up to now where it is at $3.18. So long, slow slog back from the dead level of March to where we find ourselves today. And what looks like someone, Mr. Rock Lobster, an interesting one here, maybe deciding that the party has more room to run, and he wants to get all of it. He wants to get all of it, and he wants this party to go for quite a long time, because someone came in today and looks like scooped up 7,300 of the Jan 2023. So not 2021. That's too close for this guy. Not even 2022. That's way too close for him. He's going all the way out to 2023 and gobbling up those 2 half calls. So right now, about 70-cent in the money calls, and he paid $1.30 for those bad boys. So about a 60-odd cent premium, a little bit of extra juice out here for these meaty calls. He paid through the offer. They were offered at $1.25, but then again, you want to buy calls that far out and that much size. Not surprising that the quoted market not exactly good for the size you want to get. The stock was around pretty much exactly where it is right now when this went up about 317. There are earnings. Of course, there's a lot of earnings between now and 2023. The next one is on February 25th. Worth noting, there's EX-DIV tomorrow. We're just talking about that with SPY. But if you're buying out of the money 2023 calls to trade a dividend, you're doing it wrong. Hit us up. We'll tell you how to do it. So this is an interesting one for a lot of reasons, Mr. Rock Lobster. First off, it's a $3 stock. The guy's choosing to buy 70-cent in the money calls going out 2 years. He's paying almost half of the value of the stock to buy these calls, which of course raises the specter of you could just buy the stock on margin for around $1.60 if you really wanted all this. So what are your thoughts here on this kind of meaty, long-term, and yet also head-scratching call play in ABEV, sir? Oh, he's so excited he's muted himself.
I know. I was coughing and hacking, so I had to mute myself. I'm trying to remember this. Was this the Venezuelan?
It was Brazilian.
Is it Brazilian, really? Oh, okay. Interesting. Okay, why buy the calls? Of course, even Don would say, well, there's no premium to sell in this one. So, I mean, there's nothing to sell if there's nothing to sell at $3. So the options over the stock is a little, I don't know, I guess confusing. But maybe they just want to buy more options. They're paying $1.30. What's the delta on that? So that's $3.80. I mean, you are spending a little bit of juice to buy that, but it's I don't know. I don't. This is one where like we look at it, we shake our heads, and I don't really understand why they would buy the calls instead of the stock if there is a potential for a dividend. So it's kind of a head scratcher for me. I have to be honest. A little bit of scratching my head on this one.
I'd say we can come back to this one, but that's not going to be for a couple of years. So I don't know if it's worth putting in our to be watched. Who knows? Given the year that was 2020, who knows how far out we could plan anything anymore out there. So maybe we'll keep an eye on these for the near term. I'm not sure if we're going to track these all the way through till their expiration, listeners. But a weird one. Would you like to trade such meaty calls, listeners, as opposed to maybe just buy the stock if you want it? There's an ex-div coming up tomorrow. There's a lot of dividends between now and 2023 that you're missing out with those calls that you're paying pretty much half of this price of the stock for, but also you have the stock, it could effectively go to zero, so you could lose a lot more than just the, what is he paying, $1.30 right now, but you're also getting a lot less for that, so it's a weird choice. I would like to watch it, but it's too far out. Speaking of weird and fun names, I know you guys like this one. Let's go out to good old RAD, a.k.a. Rite Aid. This name actually lighting up the earnings tape today as well. Let's see, going into their report, we actually have a remove results report. They just popped off this morning. They were at $17.11 going into their announcement. They were pricing in 13.2%, and they actually delivered a rare outperformance this earnings cycle and this entire year. Almost 30%, 29.5%. So Rite Aid on fire. Coming into this report, they were at 22.5. It's like they've given up a lot of that now, almost $3. They're down to about 19.5. So a big move in the opposite direction now, but a huge swing for Rite Aid out there. Surprising bit of earnings vol. Let's see what they've been up to throughout the rest of the year. Then we'll see what our eye of Sauron found out there today. A year ago, we're trading, a whopping $7.67. And they had a nice run up all the way up in the beginning of, and it should be not even beginning of the year, end of December, at $20.30 to north of where they are right now. Brief spike and then they sold off again really hard. I forgot what was going on back at that time, if it was a takeover rumor or a corporate action. Either way, this thing spiked hard to 20.5, then sold off again by January down to $11 and change. So crazy aberrant spike there for a couple of weeks in Rite Aid. Then it rallied again all the way up to February 21st to $16. Then it sold off briefly, and people realized, wait a minute, it's a pandemic. People may need some pharmaceutical supplies. So it rallied again to $17.20, then sold off hard again. This is a weird one. Down to $9.64. I haven't been tracking Rite Aid in a while. I used to be in our pit out there in Intel. It's a fun one to watch. And then up to $18.50 again by March 18th. This thing was all over the place during that March timeframe. Kind of throughout the rest of the year, that cycle was repeated. Peaks and valleys, just all over the place here. Got up again, so got down to $12.50 in June. By July 7th, it was $18.20. Again, this thing has been moving. I don't know why you guys like this one so much. Then it kind of has been on a long, slow downward trajectory ever since then. Got down to about, looks like $9 and change in late October before upswinging yet again pretty hard. It was actually just $10 less than a month ago, and now it's rallied hard yet again, up to 19.5 recently, maybe on the news of dispensing all these vaccines out there in these various venues. Either way, this thing is just, also they had earnings today, obviously, but I believe for that they've even been on the rampage. This thing has been moving quite a bit out here, quite the year for RAD. Let's see what our Eye of Sauron found out here. Again, with earnings this morning, so this is a bit of a post-earnings trade here. Looks like someone coming out and going pretty near term, not going all the way out to 2023 this time, going out to the 24th of December, so right before Christmas, to hit the DEES 18 puts, or maybe gobble these bad boys up. We'll see. For 30 cents, they were offered at 30 cents at the time, and then someone came in and said, I'm going to take these to the tune of 4,986 of them off your hands for 30 cents. There were 29 at 30, though, which made me wonder, maybe something was resting there when these bad boys got gobbled up. Either way, nearly 5,000 of them going up for 30 cents. The stock was 2014 at the time, so a wee bit north of where it is right now. So if they're selling them, these 18 puts looking a lot closer now than they did, at the time of this trade about an hour or two ago. So interesting stuff. Mr. Rock Lobster, first off, what do you think they're up to? You think they're right in the line in the sand, or do you think they're specking to some hard downside here? And then B, what are your thoughts on this crazy rad put trade, sir?
I'm looking at this one kind of a little bit. That's moving quite a lot for a drugstore stock, don't you think?
Looks almost like a biotech.
I mean, if Don was putting this in the Volinator right now, he would probably say, "Wow, this is some pretty big vol for."
I would say it was a good underlying to not sell options.
Yeah, it looks. I know this is in the same vein as Walgreens, and Walgreens had a move from, let's say, the low 30s to the 40s. They've been moving similar, but, Rite Aid's actually multiples of movement here. So the look of this trade, I would have to say, it has all, I don't know, maybe they lifted the resting offer on this one. A little bit more difficult to say, I have to admit. I think it's pretty aggressive for a line in the sand put. To be honest, I think maybe somebody was just fading that huge pop in Rite Aid this morning. I feel like it's a little more than that. Maybe they snagged a resting offer in the book to get that fill.
I'm surprised that offer was good for 5,000 though.
Yeah.
Usually that's a 10 lot sitting there. You get 10 at that price, and then you get your 5,000 a nickel or a dime worse. You don't get them all for that price. That's what's kind of weird.
You say buy the book, and they say, okay, well, you just bought 5,000. Like, oh, really? Oh, wow. And those puts are now trading 50 cents. So this is why Don is the man. He was right. This was not a put to sell. This is in the I don't want to sell that category. So it feels like, again, this does not have the look or smell of a line in the sand trade, but I guess the other side of these puts, it's a line in the sand trade, whether they like it or not, just a little too close to the fire for our standard trade. So I can't put this in the line in the sand category. So it does not get put there. I don't think the guy who sold these was high on the Savinator as of right now.
Well, he got 5,000 from the book, so he's up to something, right? I guess I don't know. by the book, 5,000. Oh my god, I could just see that. If you have no idea what we're talking about, listeners, don't worry about it. But yeah, it's I could see that. By the book, there's 5,000. Oh, I'll take them all. Interesting stuff. You know, we have a breakdown. Andrew always likes to review some previous trades we talked about. This one here from Angie's Home Services. I think we're going to hold on to this one, though. We'll come back to it next week, I think, because we got everybody here chomping at the bit to answer some questions. So without further ado, let's get into a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Let's get to it. Let's kick it off. These are troubled times, as we want to do these days, with a little bit of love. This one's actually some old school love. Some of our producers digging through our iTunes reviews there found this one that we had somehow overlooked from back in the early days of the show, back in October of 2011. Yeah, this show goes back a ways, listeners. This comes from Bajasaki. Bajasaki said, awesome. Love the show. Very informative. Looking forward to more fresh insight every episode. Well, thank you for that, Bajasaki. Nearly a decade after the fact. We're a little bit late in our thanks, but nonetheless, thanks to Bajasaki and everyone else out there who's been out there reviewing our stuff on every platform you get it, not just Apple, but everywhere you get it. Really has helped new folks continue to discover our stuff out here. And hopefully, Bajasaki, if you're out there listening, we like you. We remember you here. All right, let's go out here. We've been asking you guys a bunch of questions of late, including recently we asked you, we talked about at the top of the show with Don and everybody else, these markets extremely elevated. They're at all-time highs, as you heard Uncle Mike just say. And yet all the implied vol products, your VIXs, your Spikes, your vol Qs, and all the other fun stuff, are still fairly elevated. So we thought we'd turn the tables on you and ask you guys, why do you think that is? We gave you 3 choices with some others mixed in there as well. Get pandemic fears, stimulus concerns, or valuation/sell-off fears. And a lot of people wrote in with their others as well. Other was the other choice. People said the Georgia runoff election there, Brexit, a few other things were thrown in there as well. But as the dust finally settled out there, valuation/sell-off fears, people thinking maybe we're at a bit of a precipice here in terms of pricing at about 43.5%, taking the number one spot, followed by stimulus concerns, 32, almost 33%, and then pandemic fears, almost 19%, and about 5% for other out there. Right now we got a hot one going with Tesla dominating the options market. So we'd like to do our little pop quizzes for you guys out there. Puts are dominating the open interest. You have to go all the way outside the top 10 to find the first call. What do you think that first call is? Is it the June 500s? Is it the D's of this year, 700s, the Jan 80s, 80, so a meaty call, or the March 650s? And out there right now, it's the March 650s leading the dance with about 34%, followed by the June 500s with about 17%. Only about 10.5% love for the Jan 80s and the D700s. I'll show you. I take it back. D700s are winning with 39%. Easy for me to see there. And then it's March 650. I thought that was strange. All right, no love for the rear for the Jan 80s. Eric Butler chiming in saying, people would stop shorting this stock so hard I wouldn't have to keep buying calls. Well, there you go. Interesting stuff. Mr. Rock Lobster, our buddy Mr. Luigi. My boy Luigi, he was worried about you. He said, good morning, guys. Glad to hear that the Rock Lobster is back. I was worried that we lost him. So are you alive, sir, Mr. Rock Lobster? Can you confirm?
I am alive and kicking, and my heart is very warm that somebody out there in listening land cares. So that's
just
very
one.
Nice.
Just one, my boy Luigi.
I mean, that's like TOSAW. He has like 500 guys that say, hey, if TOSAW was gone, 500 people would say something. But you know what? At least I have a brother with a lot of vowels in his name like Luigi that says, hey, like we only got one Italian on the radio. We need to keep him around. There we go.
Longo, 100% Italian. I'll just throw that out there. A thoroughbred, a stallion, if you will, but I digress. My boy Luigi also had this to add. He says, so glad to hear Don actually exists. After all this time listening to the show, I just figured Mark had an imaginary friend. Yeah, Don exists. The legendary premium seller himself exists. You heard him on the show. In fact, I'm going to invoke him again right now. It's good timing we have him on right now because we have a great question that's right up his alley. This comes from Malady? Molady? Let's go with Malady. It sounds better. They want to know, how reliable is the market risk premium? Exactly what Don was just talking about. Are there ever times when the historical vol exceeds the implied vol in the marketplace? And what happens at these times? Don, I can't think of a question that is more up your alley than this one, sir. So what do you have to say for Malady? Break us down some of those times when the realized, a.k.a. the historical, breaks through the implied, and what happens in those times, sir?
So I alluded to it a little earlier, and we had it just a couple of weeks after all the you-know-what hit the fan back in March for the pandemic. So I actually researched this, and on the 6th of April, realized volatility was just a shade under 92 for the 3 weeks from when everything shut down to April the 6th. And implied volatility, as measured by VIX, was at that peak 85. And so there you had a situation, at least temporarily, where actual market volatility was about 7 points higher than VIX. And of course, it's completely understandable because what you had was a shock of major epic proportions and the market reacting. So realized volatility spiking, but VIX being a forward-looking product is saying, 30 days from now, that kind of volatility is not sustainable. It can't last. So VIX being a forecast, you obviously had implied volatilities considerably under those levels. And by a month later, in May, first, second week in May, market actual volatility realized was down to 28. So it was only natural that in these periods of tremendous stress, number one, realized can actually exceed implied volatility. And number two, it corrects very, very quickly. So it's something that does not last a long time. The market spends an inordinate amount of time having implied volatilities higher than actual or realized volatility.
Yeah, it's typically a very short-lived phenomenon there. What is it, Molady? But you got a good guy on here to break it down there. They're short-lived, but they're interesting when they do happen. And usually it kind of depends on your frame of reference, what kind of historical you're looking at, 3-day, 10-day, 30-day. If you get in the shorter end of that spectrum, it's usually easier to find those little blips out there as well. But interesting stuff, and they do open up some opportunities. Meanwhile, now it's time for us to take the opportunity to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, you know what time it is. It is time for us to go around the block, tell you what we're watching for the rest of this week into the weekend. Still got shows on Monday. I'm not sure about next Thursday. That is, of course, Christmas Eve. And the following Thursday, actually, also with New Year's Eve. So a couple of Eves on our Thursday show dates. I'm not sure about the Thursday ones. We still got some other shows in the near term on Monday. But before we get ahead of ourselves, Mr. Uncle Mike, sir, let's start in your neck of the woods. It is an Uncle Mike type of day, after all. What are you keeping an eye on for the rest of this week, sir?
Well, once again, I want to say it again, just because of the fact that I think it's really important that people understand it. SPY dividends. Hopefully you're listening to the show live. And if you have any short calls on SPY, make sure that you address them and assess your risk because it is going ex-dividend tomorrow. So make sure that you understand that. If you're listening after the market closes today on Thursday the 17th, hopefully you did it before. But what I'm watching, just wanting to see, I think what everyone's watching right now is the stimulus news and seeing if we can continue upward from these all-time highs.
There you go, the permabull out here. Always a refreshing ray of optimism. Even on a day like today when the market is full of optimism on its own. And Mr. Rock Lobster, put on your Volman hat yet again, sir. What are you keeping an eye on for the rest of this week, at least until we can all gather together on volatility views tomorrow, sir?
We have aren't they arguing still over the stimulus talk? They will be arguing about the stimulus until about 2070, I think. I think they were trying to come to a compromise with, all the states that need help. And then some liability shields, and you would think something that would be relatively simple like that they could come to some sort of agreement, but no, they could not come to any kind of an agreement. There's the era of whatever, the era of what are they supposed to work together or try to solve problems? Short-lived. I think it might have existed one day after the election, and now it's all back to normal again. So what am I watching? Will that stimulus happen? What can it do? Can Tesla go to $700? I'm just assuming at this point with Tesla, just as like a funny thing, with like, do you remember the Sylvester Stallone movie? And I'm trying to remember, it was The Demolition Man. You remember when all restaurants were
Taco Bell, baby. Premium food, Taco Bell.
Dude, all stocks are going to be Tesla. They're just going up without any rhyme or reason at this point. And I'm not saying that it's a seminal company and they're doing solar power and then they're doing batteries and they'll probably do SpaceX. So like all kinds of really cool stuff, right? Super cool. The guy's super cool and genius. But oh my gosh, and I've seen stocks go up forever before, so I know it can happen. But oh my gosh, it just seems like it's sucking all the oxygen out of the equity world because it just goes up like $50 billion in market cap a day. It's like, oh my gosh. So anyway, and I'm watching the phenomena that is Tesla. But other than that, we'll see what happens when we play out on this stimulus thing.
You see Mr. Schwartz's tweet out there from Trade Alert that 17% of all open interest now is Tesla options. That dwarfs SPY. That dwarfs SPY. And you could take SPY, Amazon, and a bunch of other names and throw them all in there. And it dwarfs them all. That's insanity. But that's where we are in the marketplace. And Mr. Don, speaking of where we are, sir, we're coming up to that point of the show. What are you keeping an eye on for the coming weeks, sir, out there in the realized vol landscape?
So because I may not be back on a regular basis, I'll go out a little bit farther and talk about what I probably think will happen towards year end and into the early part of the year. I think realized volatility will tick up a bit as we have all of these different things that we've been talking about playing out. I think VIX might continue to drop for a while and restore that more normal risk premium by having the two kind of meet in the middle a little bit. Realized go up, implieds go down. And I also think if you just talk about the market in general, that we will continue to rally into year end. And I think if we do, because of that inverse relationship, that also will probably drive VIX down a bit.
All right. Unfortunately, that music means we've come to the end, at least of this program. If you need a little more in your ear holes and you're listening live, don't worry. Stay tuned. There's some fun stuff going in between episodes, and we'll be back in exactly half an hour. Talk TWIFO, our old friend, the once and future Dr. Vix, joining us to potentially sign off TWIFO for the year. I'm not sure if we're going to have any more episodes of that one, at least live ones, just because of all the holidays I said coming up on Thursday. So we're going to talk, obviously small caps are dominating a lot of things these days, as well as, of course, crypto, blowing the doors off, and pretty much every other product that has been lighting it up out there. A lot's lighting it up, so we'll get to it all in about half an hour with Dr. Vix and others soon on TWIFO. But before we go, let's go back around the horn. Let's start with the man holding down the demand derivatives hot seat, Don. If folks are intrigued by everything you're talking about here, they want to learn more about a little thing called realized volatility, maybe, just maybe, they want to kick the tires on a pretty cool crowdfunding campaign, where should they go? What should they do, sir?
So the website is demandderivatives.com. So 2 D's in the middle, demandderivatives.com. Have a look around at all that we're doing. And if you are interested in investing, at the top of the site, there is a crowdfunding link that you can click on. Thanks very much. Pleasure being here today. Great to be back.
It was great having you back, Don. Remember, listeners, options are to be sold or not sold. Never bought. DemandDerivatives.com is the place to go. Click on the crowdfunding portal to learn more. I know a lot of you have been doing just that. It's an interesting and unique opportunity. These don't come along every day. You get to crowdfund and exchange, particularly in the volatility space. So check it out. It's worth at least clicking on and seeing what the heck is going on out there. Some interesting stuff. Speaking of what's going on in the vol space, let's go on out to the Rock Lobster. Mr. Rock Lobster, if I want to learn more about this options are to be sold or not sold, where should I go? What should I do, sir?
Well, we have a fancy vol trade club. We have the Trading Legion. If you want to learn your Greeks and your vols and how all that makes all this stuff work. And any of our other products, we got Little John, Sharp Bets, and Vol Edge. Again, if you want to see how this stuff works, get information, get learning, come on over to OptionPit.com. Go to our memberships area.
OptionPit.com. Click on the memberships tab, and then you too can meet the alter ego known as Volman. And last but not least, I don't think he has an alter ego. He's kind of always Clark Kent, but that means he's kind of an optimistic ray of sunshine for you when you call him up. Uncle Mike, if folks need someone to hold their hands, give them a little dose of optimism in these trying times, where should they go? What should they do?
Okay, first off, I'm not always Clark Kent. If I'm always anything, I am always Superman. But with that in mind, if you want to learn more about what I do, go to stcharleswealth.com and look for a financial advisor who uses the option product.
I'll leave it up to you, listeners. Is he Clark Kent or is he Superman? Hit him up. Let him know for himself. stcharleswealth.com is the place to go. And on behalf of Uncle Mike and the Rock Lobster and Don, everybody over there in Demand Derivatives land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions, for leaving reviews in the iTunes store, even from 11 years ago or 9 years ago. We love you all. And we'll see you back here in about 30 minutes for TWIFO, and then we'll see you back here tomorrow for Volatility Views, and then back again on Monday for another episode of The Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.